Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back. Another week. As far as I'm concerned, it's quite a boring week this week, but it's a bit volatile as well at the same time. Basically, what happened is the U.S. The U.S. dollars have tanked this week a bit and continue to move south at about 96. Just stay above the 96, broke back below the 95 and come back stay above 96 for the week. So it just this weakness of the US dollar just continue to show. The thing is, I've done some research last week and this week as well. The US Fed's balance sheet since early June has somewhat been slowing down, basically came back down again. So it's shrinking a bit, the market's still going up. So it's just basically quite different from last time. Last time when the Fed tried to tighten the Fed's balance sheet a bit, doing quantitative tightening, the markets have gone down. Now the Feds don't tell everybody about slowing down with purchasing and for bonds and stuff, but it's slowing down somewhat. But the market's still going up. So this one, I think this time the effect is slightly different. With the sense that this time, instead of the Feds always go in the market and just basically go and buy bonds. Now it's just like getting some shares as well, and not just any bonds. Investment grade, can be junk bond as well. So holding up the market, and that seems to help the market up a bit. But the back to the U.S. stock market itself has been trying to go up. And as I said before, the Dow Jones above the 200 days moving average having issue. And Monday was a case in point, it gone up 400 points. So everybody's very happy. And then the whole day, at the end of the day, is only up like 10 points. Nasdaq still, tried to break above the 11,000 marks and just gone negative, minus 200. I think that's on Monday, so last week, and that is quite remarkable. So Nasdaq has been has been driving the market in general, the technology market, and then moving up higher and higher once it broke the 10,000 mark, and now seems to be doing a breather. So Monday seems to be quite volatile, and Tuesday market still coming down a bit, but the Dow Jones once again tackled the 2 days moving average and managed to stay above it. And so is the rest of the race, so to speak. So it's doing well for Dow Jones finally, broken above the 200 days moving average line now. But still, this is in the backdrop of the COVID-19 in America continue to go up. And then obviously some states try to introduce some lockdown measures and stuff. And I don't know how that will affect the general economy in US. But one thing for certain that all this extra money from the last 3 months or so, when the US Fed's pumped all this money and it had to go somewhere, and they either go to properties or go to shares or some other deals. I don't know what it is, whatever the market wants. And at the moment, seems to be all going up into the stock exchange at the moment. So from the US side, seems to be all going up. But the other thing about what you call UK, the problem is on Wednesday that the U-turn about having Huawei kit in telecom operators, and basically telling the operators not allowed to buy any 5G equipment or Huawei's equipment from end of the year, and by 2027 I believe, or the Huawei kit had to be gone or something. That is a huge blow to basically the British market, telecom market, because I myself, you probably heard from my previous podcast, I'm in the telecom software market. A lot of operators went into Huawei simply because one thing really is because it's quite cheap. The technology is not fantastic, but it's improving. But it is definitely cheaper than a lot of others. And you go to 5G, Huawei is basically by hands down the best. And then the government suddenly comes in with the review of the 5G kits from Huawei because of U.S. pressure. Now it's basically do a U-turn. Last time in January, February, I mean, the UK government still say you're allowed to play 30% of the kit from Huawei, but have to be on the outside the skirt. When basically the circumference of the network, we just basically just like the mask, the signaling systems, not the core when you do the billings or provisionings or customers details, holding or billing systems, that kind of stuff, and something that go to the core of a telecom network, kind of stuff. But to now is basically on Wednesday do a U-turn. I think yes, UK in general has always been following whatever the US wants, and UK and US has always been together. I mean, just look at Iraq when everybody say, don't go in Iraq, don't bomb Iraq or something, don't remove Saddam Hussein, and nobody's agree with around the world except US. US and UK just gone in, even though the intelligence was wrong, it was proven wrong, and then they still gone in anyway. So this special relationship basically forces the UK hand as well, because UK, after coming out from the Europe, it does want to establish its trade relationship with rest of the world. US is one of the bigger market, but basically to balance up between US and the UK, China, and I think I personally feel, because maybe I'm Hong Kong Chinese, a bit biased, I think the UK is a bit more reluctant to follow what the US says. It's going to lose quite a big market. China is not just going to take a lie down. It's already quite vocal against Australia, and also has parties continue with the US. And I don't think it'll be sitting down quietly for the UK. So I don't know how the China will play its hands, but I don't think it's going to be good for the UK market. And this is also causes the pound not moving that well for the week as well. And I think that's what's actually happening at the moment. And a lot of this who are going on between US and China, and now China with US, China with UK as well. It's just not going to be any good. It just sort of tick for tat and stuff. And overall, I think that there's two things. One is obviously European country is handling the COVID-19 stuff, as far as I'm concerned, detection and stuff. I mean, everybody say China is a closed system, is communist, it doesn't want to share the news, or share the news very slowly, that kind of thing. And given that's the fact, why doesn't the rest take heed of what might be happening, just be prepare themselves better? It shows that especially US under Donald Trump administration had done a really bad job. UK wasn't well either, and within Europe, I think UK is had one of the highest death tolls out of COVID-19. But the other thing also likely to say is Donald Trump seems to be, I don't know, maybe this is his way of trying to get himself being re-elected, so to speak, and we're getting on quite tough on China and to talk with China and just continue stir up trouble for China. And I think that's a general tone that both houses, the Democrats and Republican, not very much China friendly, so to speak, and just continue to push on China issues. And if Donald Trump, which I think because of his mishandling of the coronavirus in US, probably is basically going out all gun blazing, so to speak. He probably have a now only 50% chance, maybe he'll be much higher chance before if COVID-19 mishandling didn't happen, but now it's more like 50% chance that he might not get re-elected. So if that's the case, he would just basically, I personally feel, just go out and try and everything. Basically, if there's a chance to make more noises, and try to do not very good things to China or on trade side, and limit its trade with other trading partners around the world as well, influence other countries to not work well with China. I think it's just use that to try to win more US votes, so to speak, and try to get himself back. But what I see is if the music is so to stop, say for Donald Trump administration, I think it would just go to make a big mess for the next administration coming in, with China especially, but also Middle East or around the world. Basically, just Donald Trump being Donald Trump, just starting fire everywhere. people used to say, what you call, I mean, U.S. go around and stirring up troubles anyway. But I think this Donald Trump is one of the worst examples so far. But having said that, if Donald Trump think he can get reelected, I think he will still continue to hit on China, not be very friendly China trade or over trade and other things. But it'll probably take a bit longer time. But so overall, I don't quite know how that the election is going to happen. How to be like, this is July now. November is coming, and that is going to probably, if Donald Trump's continued his insane way of dealing with foreign policy, doing all different things, it probably, quite a big ride, a volatile ride for the next 6 months until the election, or 5 months now. Basically, we see how that plans out, but that also have effect on overall on the U.S. Trade relationship with China, with Europe, with the rest of the world. COVID-19 still hanging around, and I think next week or so, the reporting season starts. I think the banks have been saying they put aside quite a lot of money just in case the people couldn't pay in America, which is I said before. The COVID-19 caused a lot of people losing their job. Some of them get called back, but not as the full whack. And when the shops are shut and restaurants are shut, even now coming up is limited capacity reopening, and the COVID-19 we introduced. It's gonna be tough on the people, the restaurant owners. Pay the bills, pay the staff, and don't have enough income to actually cover it. And a lot of them will really go struggle. However, the American government might try and pass more bill and put another $1 trillion here and there to help the economy. But the government can only help so much if the economy is not picking up and the COVID-19 still continue with no vaccine available. And that's just going to hurt the economy pretty badly. That means the Feds have to basically increase the balance sheet, just send out more checks and keeping more people longer on the dough, so to speak, and just not good for the U.S. economy. And we just have to wait and see how it goes. The one fact for certain, though, from 2008 to 2018, 2019, the U.S. government have increased, the Feds have increased its balance sheet from about 2 trillion or something to like 5 trillions, and come back down a bit to 4.5 trillion before the COVID-19 kicks in. And from there, within 3 months or so, we go from 4.5, just under 5 trillion to just over 7 trillion. So 2 trillions or so US dollars in the space of 3 months. This money had to go somewhere, and we know the last 10, 11 years, the stock markets push up quite a lot because of all this hot money or city money as well. Have to go around everywhere, and then one of the way they're going into is the stock market. But would the stock market continue to move up? I don't know. The economy is going the reverse. It's slowing. It's not doing well. People are struggling to find work back into employment. Shops and places like that just couldn't make its ends meet, so it cannot employ more people. The economy is not really there to support the share price, and so we just have to see which one will win out. Would it be the real economy win out at the end, or just Feds pumping more money artificially to pop up the market? So the next 6 months, like I said, is going to be quite a volatile ride, and just wait and see. Anyway, this is enough of my morning for this week. Next is my update to my portfolio coming up. Okay, first off the bat is again Apple. No change from last week. Buy short term, medium term, and long term is also buy as well. Amazon, there's slight change since early in the week. So basically, short term is a sell now, and medium term is still a buy. So it's long term is still a buy. So it's a slight change here for Amazon. Next is Australian dollars against US dollar. This is basically just going sideways, having problem going up above 70 Australian cents to US dollar. So but basically still in a buy mode, but it's on a sideway move. So short term, medium term, long term is a buy for Australian dollar against US dollar. Brent crude. Short term is a buy, medium term is a buy, long term is neutral. TWI, US crude, short term is a buy, medium and long term is neutral. I mean, crude overall since end of March when we got minus 37 has been recovering, so to speak, end of March and up to now, and is slowly going up, and it's very steady as you go. So I think unless there's major disruption happening, I think the oil basically can move as well. The other thing to watch out is when oil move, not like the US dollar index weakens, because everything is in commodity wise is trade in dollars term. I think Brent crude can also benefit from that as well, and so is TWI. So keep watching. If you are trading this one, just be patient and see how it goes. Next is DAX in Germany. Short term is a buy, medium is a buy, long term is a buy, so there's no change from last week. Next is Dow Jones. Short term is a buy, medium term is neutral, long term is now a buy now. So what happened is over the week, last week basically I was saying the index is a bit struggling, going above 200-day moving average, and then suddenly during the week, I think Monday, Tuesday, it's just gone up quite a bit. So, and it stays there for the rest of this week anyway, more or less. So it is good. So that is moving upwards now. So we just have to see how it goes. Next is FTSE from UK, FTSE 100. Short term is a sell, medium term is neutral, long term is also neutral now. So it's not much going on with FTSE. Next is gold. Short term is a buy, medium term is neutral, long term is a buy. So gold sort of have moved up a bit towards the 1800 mark, and then actually then come back down, just broke below the 1800 and stay back around 1800 throughout the week. So it's more or less sideways again. So you see gold is more like it gone up suddenly and then come back down, settle down, and then slowly move back up again, gone up sideways, gone up sideways, those kind of things. So we just have to wait and see. Similar to the crude oil with the US dollars index, or US dollar in general, continue to weaken, and there should be some movement on gold, but I think next year will be more action will be next year. Basically, the fact is, there's a bear market and the economy is not doing well, and that's my initial assumption early in the year, and I think the bear market lasts 18 to 12 to 18 months, so next year possibly you'll see a lot more movement on gold when people really see it as the economy is not doing well. I mean, COVID-19 suddenly came in, of course, in March, and that probably disaccelerated a bit, but I think gold, if any luck, I'm quite surprised anyway, but any luck we might be looking at spitting distance to 1980 or 1920, which is the height achieved back in 2011 or something. So it's only about $100 odd, less than $20 away. So watch this space and just keep on it. Next is Hang Seng. Short term is a sell, medium term is a buy, long term is neutral. So this week Hang Seng has changed internally to the short term have plunged. The security law obviously may be a bit of effect, but before when it first came out, things seem to just continue going up, and then now suddenly something else seems to be happening. So I don't know much what is actually happening here, but as far as I'm concerned, just follow the rules. And short-term wise, is a sell at the moment for Hong Kong index in Hong Kong. Next is Nasdaq. This just continuing. It's a buy, short term, medium term, long term is a buy. So what's happening is last week, of course, it gone up to 11,000, but it's a same day reversal, and then it's gone back to 10,600-ish area. So it's staying more or less there for more or less this week. So it's a sideways trade at the moment. So 11,000 is the place to watch. Next is Nikkei. Short term is a buy, medium term is a buy, long term is also a buy. So Japan seems to continue doing well, so we'll just have to wait and see what's next. With COVID-19 not coming back up just at Hong Kong as well, so what's the impact? We don't quite know yet. Just watch the price basically. Next is silver. Short term is a buy, neutral for medium term, and long term is a buy. So similar to gold, silver is always lacking. Even in before back in 2010, 2011, but silver they went up to like $50 back then. Once it broke about $20, so it's hovering around 19 at the moment. So 1950 and go back down to 19. So if it broke above 20, I think there'll be quite a bit of movement. So we just have to wait and see at the moment. Next is US dollar against Chinese yuan. Still, short term is a sell, medium term is a sell, long term is also a sell. So basically, the Chinese yuan is basically getting strength against US dollar. A bit surprising, really, for myself because obviously China, yes, is easing the lockdown, but introduction of the some lockdown again because some virus been found, COVID-19 in China, but its export is not doing well. Of course, it have recovered a bit, but not as good as before. But the main market in Europe and around the world is down, having a spat with US, also problem with China with Australia. So quite a big weakness there in the economy wise. But then the yuan is continue to go up. I think that's another reflection on how the US dollar is coming down. Next is Japanese US dollar against Japanese yen. Short term is a buy, medium is neutral, long term is a sell. This one basically, I think, is lesser to evil here. Both US and Japan has been printing lots of money, especially Japan has been doing that for years, decades, in fact. And will US follow suit? We don't know, but at the moment it looks like Japanese yen is weaker than the US dollar, even though with the US index, dollar index gone down. Japanese yen seems to still losing ground against US dollar. Next is British pound against Japanese yen. Short term is sell, medium long term is neutral. Well, it's not doing well in Britain with obviously the COVID-19, that's why with China biosecurity law, and latest now the Huawei tobacco. It's basically people are not quite sure is it and it's a good investment place or not. The pandemic also hurt its economy. There's talks of rising increased interest rate or taxes, that kind of stuff. Well, we just have to wait and see. And also, we have the break away from the Europe coming in effect, hopefully end of the year. And all this uncertainty is happening, so it's driving the British pound down. Next is British pound against the US dollar. On the short term front is a buy, continue that way. Neutral, medium term, long term. So against US dollar, British pound seems to still getting strength a bit slow around the 1.25 market moment. But we just have to wait and see. Next is Bitcoin. Is continues. Short term is a sell, medium long term is neutral. So no difference here. It's more or less neutral at the moment as far as I'm concerned. It's gone sideways, really quiet on Bitcoin, and the movement is not a lot and still hovering around the $9,000 marks. And just wait and see. All this small little movement feels a bit of a coil. Basically, when things moving in a tight range, when you break either way, up or down, it can be quite massive. I don't know which way it will go. I'm hoping it go up, but you never know what was happening. But as far as I'm concerned, unless it's go back above the 50-day moving average, is around 9,200 kind of area, I don't see it's going to have much effect. So probably the sideways trade is going to be continue a bit, but watch out when the coil, this little spring coil that sprung, either way, up or down, it's going to be quite massive movement. So track it and watch it. Next is obviously the iShare 20 TLT ETF. Short term is a buy, medium term is neutral, long term is a buy. So no change from last week. Next things I've added now is called Tesla, the car company. Basically, short term, long term, medium term is a buy. Why I'm including Tesla is basically back in just before the pandemic time, when the the share was doing well at the time anyway. It gone back above break about $1,000 mark per share, and then that was in around early February, before the pandemic that actually set in. And then it of course crumbles up like everybody else, and it gone down to like $4,000-ish in late March, and then has been more or less in upward trajectory from there in recovery. And now the highest is 1,800. It didn't stay there. It's more or less a same-day reversal, but now it's hovering around the 1,500 mark. So it's remarkable. It's more or less more than double, like triple in size, that kind of thing, since the last 3 months. Why I'm tracking this basically, I mean tracking it anyway. I'm including the sample portfolio basically to keep track of and see how the trend is. The trend has been up and continue to be up for now. But this is a good lesson here also to learn from basically the market saying one thing, the economy is not doing well. Even I think the new sales in China for Tesla is not is coming down slowly, and basically just reflecting the economy. But everything is supposed to be all driven by economy, but the share price continue to just move up. We just have to see how it goes. I think all this stuff is going to continue a little bit for Tesla or this Nasdaq dominated. Technology shares, because I think a lot of new kids on the block, short term by a trader from Robinhood, is going into a lot of these small, big company, but in a small little pieces, and because they got large volumes, really driving technology shares up quite a lot, and so that is. One of the reasons why I want to track it, because I believe this parabolic up will move unless it's backed up by a economy that actually proven that it can continue to sell cars and produce cars in the rate that it has been predicting and projecting, and I think there's a lot of movement here. It could come down quite a bit if the market sentiment change a bit as well. But who knows? This really feels like a .com era. The company like Amazon before just gone up hugely, but the economic downturn comes in and Amazon got hurt really badly. So Tesla, unless the economy is around the world, both US and China is doing well, able to this one can able to sell its car, then I just personally I just feel it could be because of this parabolic move, huge move within a year. February gone up from 5,000, that's right. And last year December, and then got up February to 1,000, and then come back down to the 4,000. Seems to make a base in March, and then now gone to 1,800 highest, like a week or so ago. And I personally feel it's parabolic. And but when the markets want to go somewhere, you just have to go somewhere. You just continue to go. But things like this, especially if you look at like a monthly chart, that kind of thing, it really doesn't really boils down well for the share itself like that. We just have to wait and see when the basically downturn is coming, and then we will make judgment based on that. So that's the end of my podcast for this week, and I speak to you next week. Bye for now.